The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN 9:06 a.m. We got 24 minutes until the start of trading, and we have markets in positive territory, continuing the acceleration we saw yesterday. We get the S&Ps right now up 15 points, trading at 41.69. You're talking about within 10 points of the highs we had early Tuesday, and we are a remarkable 115 points almost above the lows we had just early on Wednesday morning. You get the NASDAQ 100 up about 54 points, basically ticking across where we were as of last evening. Dow up 131 points this morning, 34,159. The Russell up by 14 points at 2219. Bitcoin, a little bit of stability after that big sell-off that we had on Wednesday. You spiked to 30,205. Ever since then, just been oscillating around the $40,000 mark on Bitcoin. Up $300 technically on the session. Bitcoin trades 24/7 though, folks, so it's not like we close on Friday. Weekend, we could see some volatility this weekend in that crypto market in a big way. Crude catching a bid, 63.22. You're up $1.29 or more than 2% right now. Gold higher as well by about $6.70. Now gold within a few dollars that high we had on Wednesday. We're at 1888.60 in gold. Silver's flat at 28.06 this morning, and we have yields with lower yields, rising price. You're talking about a yield right now of 1.61%, about 1.613 to be exact. The 10-year up 4 ticks at 132.19. And as I mentioned when I kicked things off, relatively high VIX with everything going on in the market. Now, yes, we've pulled back because we almost had a 26 VIX on the low that we had about 10 a.m. Wednesday morning. We reached 25.96. We have 6 points, 5.5 maybe, points have been pulled out of that market. But you look at the S&P, folks, to have a VIX sitting at above 20 when we just traded up 115 points from where we were, so 115 points higher in the S&Ps, that pulls back from a VIX of about 25.50 to about 20. But if you take a look at where we are on a daily basis, to be pricing in that type of volatility with a market that is in a straight upward channel that began at about 30, what's to be exact here, 32.25. We're 943 points, quick math, 943 points above that price point in the S&P since basically October 30th. We've pulled back a bit. You're in the straight uptrend channel, and you have volatility priced into this market, probably rightfully so, because there is some downside risk, I would say, as we've seen. I mean, it doesn't take many days, folks, when you have a channel line that goes from about 42.40 down to 40.40. You're talking about 200 S&P points, and we make it there in almost 3.5 days in this market. So keep those spikes up as the VIX elevated for real reasons. 2050. We haven't seen the pullback you might expect at a market that's almost pushing 4,200 in the S&Ps this morning. All right, jumping around with some of the stocks with earnings. I mentioned John Deere. They are out with their numbers. I mean, quite a chart, right, on this equity. Zooming in on the action. John Deere, pre-COVID, we're at about 175. You trade down to almost 100. You reach $400. That was before we sold off in the market. May 10th, you were up at 400. This morning, we're going to open about $6 in the positive. So you're pushing about 361 on this chart is where the bid ask is right now in this equity. And taking a look at their numbers, I just pulled them up in the news tab on the Thinkorswim platform here. Strong numbers. Sales and revenue totaled $12.06 billion for the quarter for John Deere. Ended May 2nd, that quarter, up from $9.25 billion a year ago. Year ago number is going to be skewed, of course, but the street was looking for $10.56. Just staggering, the number of beats and the size of the beats in these markets. Folks, you're talking about $1.5 billion. $1.5 billion in 90 days extra revenue. Remarkable. Looking ahead, the company expects fiscal 2021 net income 5.3 to 5.7 billion. The one thing here, they expect to see increased supply chain pressures through the balance of the year. That was their CEO saying in a statement. You're going to see that a lot, and it'd be interesting to see when that persists, how long that persists, and when that no longer becomes an excuse for some of these markets. It's probably a valid excuse right now because of the strains going on these supply chains, You're not seeing John Deere. That's not a real material thing that's going to punish them, probably priced into this equity in some degree. But nonetheless, you're up about $6. You're pushing just shy of 2% positive for John Deere this morning. I believe Foot Locker out with their numbers as well. Foot Locker up about $1.30, 61.24. I believe they have him, Foot Locker, up here. So Foot Locker, yeah, they pull in $1.96 a share, well above the $1.09. Revenue also topping forecast. Comp store sales surging a better than expected 80.3%. Talk about some skewed base data that this is comparing to a year ago. Not many people, I imagine, shopping in Foot Lockers in the comparable quarter of 2020. So they have comp store sales 80.3%, almost a meaningless number because things were probably so bad a year ago. But nonetheless, you're trading higher on John Deere in a big way. Let's jump around to some of the FANG stocks as we get the NASDAQ 100 up a bit. But you get the NASDAQ 100 up about 0.3%. You get the Dow up about 0.4%. S&P is 0.4, right across the board. The only one that's kind of deviating, Russell, a little bit more volatility in the Russell as usual, up about 0.7%. But jumping back, Amazon shares 32.55, so you're up a hair. You got Microsoft shares right now this morning. Microsoft pushing about basically same deal. I mean, you're just barely positive on some of these. Apple shares this morning, quite a day yesterday for Apple, right? Early in the morning, you're talking about 124. By the end of the day, you're almost pushing 128. Staggering when you think about it. So that's almost a $4 move in Apple, right? And you talk about some volatility, folks. We'll go to the Analyze tab, the fundamentals. You scroll down. You're talking about a company that has almost 17 billion shares traded. So for every dollar Apple moves, their market cap is pushing potentially almost $17 billion difference. Yesterday alone, you have like a 60, what is that, 17, 34, $68 billion rise in the rise of Apple. Not many companies valued at over $70 billion, but just yesterday from 124 to 128, it just shows you how volatile even some of these tech stocks are right now when the valuations are so high that you get the type of volatility that you're talking about a move of almost $100 billion. And really, yeah, that's a nice pop, but these are bars that are pretty standard on Apple recently, right? You're talking about bars that are $4 to $5 across the board in this equity, which is going to drive the markets in the S&P when you have that type of market cap moving action in the biggest stock in the whole world. Let's jump over to Tesla. Story out there this morning. Tesla, Elon talking about that they will potentially be in Russia at some point. Nonetheless, you got Tesla pushing 604. We're up about $9 coming into the opening bell this morning, and we'll take a look at Bitcoin. BTC, Bitcoin, you're up 1.05%, 1%. You put this thing back on a daily. I mean, quite a drop. You know, the only thing that you could look for in terms of maybe saying that it found a little bit of a bid, but does it challenge this thing again? I mean, you know, look at the volume, folks. You're talking about 26,700 contracts traded for the day when we made that spike low on Wednesday. Yesterday, half of that volume. Day prior to that, less than a third of that volume, correct? Yes, less than a third, about a third of that volume. On the 18th, we flash low. You're sitting at 40,745. And the one thing I'll say about that crypto market, folks, there are no type of curbs whatsoever. So that works in both directions, right? You see volatility that we just don't see in equities because the market doesn't want that type of volatility for consistency purposes and fear purposes. If you let Bitcoin sell off from 40,000 to 10,000, there's going to be some devastation in those crypto markets. But guess what? That's totally in play when you have the thing trading from 60,000 to 30,000 in the span of almost a week. Stay tuned, folks. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&P's up 17 points, trading at 4171. We got the NASDAQ 100 up 52. We get the Dow up 150. Markets continuing to melt in an upward direction this morning. Jumping around, one article I wanted to take a look at. Interesting article out there from Bloomberg this morning, talking about the biggest 50 firms. Nice segue last segment, talking about Apple, right? Almost 17 billion shares of Apple. Every dollar it moves, the market capitalization, $17 billion difference. You move $4, you're talking about $68 billion, almost a $70 billion difference in market capitalization just for a $4 move in Apple, which it gets a decent amount of the time these days. So the market cap for the top 50 firms equals 28% of global GDP. Market cap as a percentage of global GDP. You're talking about 28%. All right, you back things up to 2010, you're talking about 12.7%. That's a staggering amount of business that's been consolidated into the top 50 companies. 2000, I guess that maybe that tech boom was pushing things, 22.1%. Hopefully that's nothing ominous between the pullback potential. 1990, you're talking about less than 5%. So the top 50 companies by value added $4.5 trillion of stock market capitalization in 2020. Did you hear that? Just the 50 companies alone added almost $5 trillion of market cap. As I mentioned, right, it's not hard when Apple is adding $70 billion just yesterday alone. You see how that number could be added up when you add the 50 biggest companies out there. Taking their combined worth to 28% 3 decades ago, the equivalent figure was less than 5%, okay? So you have that number. Then you look at the fat profit margins, right? You push 1990 to 2000 to 2010 to 2020. The graph speaks for itself. Margins, as these firms have become so much dramatically larger, have been rising. I mean, you're dealing with, number one, you're dealing with the tech sector, right? You got the biggest companies out there basically selling what? What is Facebook selling? Advertising, right? There's actually very few costs associated with selling extra ads. Once they have those fixed costs in place, the variable costs of selling another ad is almost zero many times. So you get these enormous margins when you're able to push out and sell product that does not have a variable cost, right? Facebook builds out their infrastructure. That is a fixed cost, whether they sell such and such ads. And yes, there's going to be some variable costs, but most of the time they have the infrastructure right now to deal with it in terms of dealing with as many ads as they can sell, so the margins rise. Google, same thing. Amazon, probably to some degree, at least. Amazon not in the same advertising, which is the biggest area where you can just sell extra ads. 1990, you're talking about margins of 7% in that. When you push to, just pulling things up here, 2000, you're talking about a 12.5% margin, 16.8 in 2010, and margins really widen up to 18.2% when you get to 2020. Huge margins. And then you talk about whether that serves society, right? So you have the biggest companies in the world getting bigger, able to raise their margins in a big way. That money's coming from somewhere. Now, where it gets interesting is then you add the taxes onto things, folks. The biggest companies just generally post fatter margins and pay less taxes than they did. The median effective tax rate in 1990 for those companies, 35%. 2000, 31.6. 2010, they're pushing less than 25%. And those companies last year, folks, 17.4%. These trends are pretty dicey, okay? And taxing companies, of course, gets political, all right? But it's very difficult for me to imagine a world where you have 50 companies dominating almost a third of the entire business throughout the entire globe. They're raising their margins to now almost $1 out of every $5 turns into profit. And at the same time, they're cutting their taxes over a period of 30 years in half. That's a tough one, folks. I think it is. But you're seeing it in the charts, right? The rise we've had. Now, what I love to do, let me look at the Market Watch tab on the Thinkorswim platform. You're going to see real quickly why some of these companies, 50 of them, represent such a large share. You jump over to the S&P 500. You don't have to choose many companies to get a big supply in terms of the impact. You choose Apple, Google, Facebook, right? Market cap. Facebook's at $900 billion. Google's $1.6 trillion. Yes, $1.6 trillion almost. 1.6 trillion. I have to recalibrate my brain talking about these numbers, folks. Apple, 2.12 trillion. Microsoft, 1.8 trillion. The list goes on and on. Amazon, 1.637 trillion. Interesting article to get your head around those trends, though. Really surprising to see how they go, and not too surprising if you think about it, right? You're at a level of a company. I mean, we talk about it all the time. These companies do business, folks. Their business, part of it is lobbying. That's it. When you're worth $2.1 trillion like Apple, and your stock price, every dollar it moves, is worth $17 billion. So think about that. Every 10 cents, if Apple can influence the share price of their shares traded by 10 cents, Apple's market capitalization is reflected in a difference of almost $1.7 billion. For every penny that Apple can move their stock price, you're talking about $167 million of market cap that they can rationalize would be warranted for that rise in their share price. That's staggering when you put it that way. I hadn't even thought about it myself, but Apple, they got 16.7 billion shares outstanding. Quite a company, biggest company in the world in a big way. But something to wrap your head around when you see those trends of the biggest companies in the world controlling all the business in the world at the same time of raising profit margins for themselves and paying less taxes across the board. I don't think those trends all add up to a benefit for society overall. S&P is continuing to melt up. We're pushing almost pre-market highs this morning. We had a high of 4173.25 just prior to 8 a.m. You look where we are. We basically just got up to where we were, and we just rose above it actually as well. The highs at about 3 o'clock yesterday, you're talking about a high of 4169.25. So S&P's above that high. We had a little bit of a pullback coming into the closing bell, about 17 points. But man, the run we had just from early yesterday in the S&P's, 4,085. You're almost 90 points above that price level in the S&Ps right now, trading at 4172. And as I mentioned, you're 90 points higher, and the VIX is just hanging. The VIX not willing to give it up below 20 right now, 2043 in that volatility index. All right, let's jump around to some of the stocks I take a look at. Disney, we have some Disney in my newsletter, Rocket Equities and Options. Folks, if you'd like to try it out, I always got a report out there Monday through the week when warranted with trades. Quite a pullback on Disney. We've pulled back kind of this area that we traded to their earnings all the way from December. You trade up to 203. Disney giving up more than $30 right now at 171. They missed the mark on their earnings. On May but we popped a little bit from where we were in terms of the lows, but you want to see Disney find some strength here. The one thing I will say is don't think it's going to get back to these levels, but the pre-COVID highs, 153.41. If you're looking to get in Disney, haven't gotten Disney, you could begin a partial position. Really, that would be a great entry, getting into it back at about 153.41. Don't envision it getting there, but if it does, keep that one on your radar. Uber's had quite a pullback as well. Uber shares, we'll put this, that's a weekly. Put it back on a daily. We'll zoom in on the whole action we had. And you were in a consolidation. Uber has some real volatility. We were at a price point on April 29th of 59.22. Uber actually traded to a low of 43.17. Again, we have some Uber in my newsletter. We did not sell this position yet. If you're in some of these equities, folks, all I can say is, you're in equities that, like Uber, they're just more volatile than the market. You will pull back from 59 to 43, but just like that, we're up 15% basically in the last 9 days in Uber, catching a little bit of a pop to 49.33 this morning. Stay tuned, folks. We got the opening bell coming up. We'll be back in 3 minutes.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And just like that, we got markets open, and markets melting even positive from here. 41.75 up 20 points right now in the S&Ps. Dow up 181, 34,209. Russell up 20, and the NASDAQ 100 up 66 points right now, 13,550. Let's go over to some of the stocks that are moving this morning. Thanks to our man S&P and the Den talking early. It happened. NVIDIA, 9 o'clock this morning. They announced a 4-for-1 stock split. Now, NVIDIA, they have earnings next week. CRM, Salesforce, they have earnings next week along with some others, but NVIDIA, CRM, they were the two I was actually looking at prior to this morning already. Not going to make a trade, but just kind of scouting what's going on next week. NVIDIA, getting into it, I believe they're talking about one of their earnings. The earnings tab, May 26th. So what's May 26th? That is going to be next Wednesday. I believe CRM, before we jump around, you're talking about May 27th. Yes, next Thursday. But back to NVIDIA. So they announced 4-for-1 stock split. Market likes that action. They're up $15. You're talking about 2.5%. No, 3.5%. You're up $20 now. You're up 15 just from where you were when that news was announced. You were already up $5 NVIDIA on a 4-for-1 stock split, trading higher. So as we come into that, you got NVIDIA, quite a consolidation on this equity, right? You look at where we are. We got about $500 as of August. You were back down to a low just a few days ago in NVIDIA of $541. Just like that, you're at $604 coming into their earnings next week. And you got Salesforce coming out with their numbers. Salesforce, boy, it's interesting how this equity, you go back to August, you accelerate to a dramatic degree from 220 to 280 practically on their earnings last August. You come back to earth on their earnings a quarter later. They miss basically again in February. Now, they have their earnings, as I said, next Thursday. They'll be coming out. They get an upgrade the last couple days. And you have traded now from a low of 208 on May 11th, the last 10 days. And really, zooming in, you're talking about 9 trading days, 224.68, and that's an area I have it on my chart. So zoom it back out. You really want to see it hold above it. You know, we've consolidated, we've traded lower, not where you wanted to see. That's an area you want to see it hold above. Nice to see it accelerate higher. You're seeing some volume come into it really in the last couple days as well. Zooming in on the action, you see those spikes. We had 8 million shares and 6.7 million shares traded in the last 2 days as we bounced from about 215 to 224 in Salesforce. All right, checking out what else we have going on in terms of equities. Let's jump through them quick. We got VF Corp, company behind North Face, Timberland. They posted their numbers. They beat top-line estimates, but report lower than expected profit. VF said the majority of its supply chain is operational, although it's seen isolated product delays. That's not what the market wanted to hear. Let's see how it reacts on the open. VFC is their symbol, down 5.1%, giving back basically anything that we had going back all the way to November 9th, $80.19 on their numbers. Let's see, the Buckle, not familiar with them. Well, they're trading higher. Let's see how they do. They posted their numbers. BKE, is that right? It sure is. They give it all back from 44 down back to 40. I mean, some of these stocks, let's take a look at some of those. Macy's, they were out there in numbers on Tuesday. You spike higher. We're actually lower below that number on their numbers. Let's jump to some of the stocks that had it this week, right? In terms of having the numbers. Walmart, they jumped from 138 to 145 almost. Been a decent week for them following up on those numbers. Target really crushed it out of the park. Check out Target. We're up another 0.2% right now this morning. You put Target on a chart, you're talking about all-time highs. Quite a channel line we're in right now. You push the top of that, let's just extend to the right, and you're talking about maybe a price of 228 to reach the top of that channel line in Target. You're trading at about 222 right now in that equity. We also had TJ Maxx with their numbers, trading lower in a big way on their numbers Wednesday early in the session. $73. We're trading at about 68 so far this morning. All right, what else we got? Just this morning, we got Foot Locker out with their numbers, up about 1% after trading higher. Decent numbers as we talked about before. We got John Deere open, pulling back as well. The expectations of some of these equities, folks. We went over the numbers for John Deere. They took in revenue of like $12.5 billion. Market was looking for about 10.5. Something I think they took in 12. Market was looking for 10.5. They take in an extra $1.5 billion over the period of 90 days. And just like that, negative territory for John Deere, down about 0.4. But all things considered, if you've been in John Deere, you're doing just fine. Back it up a year, you're at 138. You want to see the COVID lows, you're at 106. You just pushed 400. Now, here's where things get dicey, though, folks. Don't imagine this is going to happen for an equity of John Deere. But, boy, you ever get runs like this, okay? You want to talk about what's possible in terms of a pullback when you trade from You're talking about only May, folks. Okay, 1 year ago, you're trading at 138, you push 400. A 382 retracement gets you maybe at around 290 to $300 because the run's been so big. And that's been pretty much a one-way move since May 11th in this equity. We're talking about weekly bars, okay, and we're going back a year. And think about, we got about 52 weeks in here, right? And I can count pretty quickly how many red bars we got in there. 4, 8, 10, 12, 14, maybe 16. You know, you count the last 2 weeks, you're talking about 14 weeks out of 52 that this thing's been red, and it's been a one-way ship to the upside for John Deere. All right, markets continuing. Check out the Dow up 248 points. I'm going to put this back on a 5-year daily. We'll see the full COVID collapse in the Dow down to a price level. Can't even believe it right now, right? At 18,086 in the Dow. Now, a channel line, speaking of channels, all right, begins to form basically in May. We have lows, we have highs. The lows begin to match up, right? They pretty much correlate. We maybe trade a little bit lower in October. The highs correlating as well. Now, what the Dow's done is we've risen above that level. Excuse me. Risen above the trend. And what's interesting here is, I mean, you start getting a liftoff on the Dow in terms of where we are. This thing could really accelerate higher. Always interesting when you get a high out there at 35,000 on the dot, right to the actual tick in the Dow, 35,000. We're trading 34,296. Now, you want to see how that reacts in terms of trading out of the channel line in the Russell. Pretty similar territory here. We were ticking across. Look how that channel line formed and acted as a period of support as it bounced in the Russell, talking about February, talking about March, talking about late March, talking about again on April 20th and 21st. And just like that, we're consolidating right near the upper boundary line at 22.23. I mean, you just trade down to the lower boundary line, which kind of correlates to where we are touching from this area of basically beginning in April of last year. We touch it in September. We touch it in October before the market really takes off. You could potentially trade down to under 2,000 in the Russell and still be okay, just getting back within that channel line, maybe getting a little bit out of whack. Trading from a price point in October of 1,500 to 2,300 in March. You might need at least a consolidation in the Russell after trading up more than 50% over the period of about 4 to 5 months in the Russell 2000. All right, jumping back to see what we have happening in the markets, and it just keeps going, folks. Look at this. We just pushed above the highs that we had all week at 41.8025. You're trading 41.75. You're up 25 points in the S&Ps. Dow really pushing, up 290 right now in the Dow. 34,322. You're about 100 points away from where we were early Tuesday. Checking out where we are. S&Ps right now, right in the middle of its channel line. You know, we're making a run to the higher side of that channel line. You're talking about a price of about 42.84, close to almost 3,000 in the S&Ps if we just get back to the upper side. And you better believe that's possible, folks, because we've been in this well-defined channel line. Really, you can make a case since about October, or really where the run began on November 1st. All right, folks, stay tuned. We'll be coming back. Still time to give us a call. 877-927-6648. It's Friday. We're 8 minutes into the trading day, and we got markets. S&P's up 25 right now. We'll take a look at some commodities. We'll take a look at some Bitcoin we got back. Crude up $1.61 right now. You got gold up $5.1886, and Bitcoin continuing to climb from the lows, up $800 at about 41K. We'll be right back, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Right now, you're looking at the market. S&P is up by 24 points, talking about 41.79 right now in the S&Ps. NASDAQ 100 showing a little bit of weakness compared to the other indices, still in the positive by about 0.2%. But we got the Dow right now up 0.9%. Russell up more than a full percent at 22.29. Jumping around to what else? So Oatly, the oat milk company, they go public yesterday. The price of their IPO, $17. Decent day for them. They end the day just above $20. And this morning, you're up. They ended at $20.20 actually yesterday. The close, you're up $1.40 today, up another 7% for this company. Be interesting to see how they trade early in their IPO process, going public just yesterday. All right, what else we got going on? Jumping back to some of the stocks that are moving this morning. So Carnival, they said their flagship brand, as well as its Holland America line, would resume Alaska cruises in July. Princess Cruises made a similar announcement after passage of a new legislation by the House and Senate. They temporarily waived the rule that required Alaska cruises to make a stop in Canada. Was not aware of that rule. Were you aware of that rule? Was not aware of it. Not even sure why do Alaska cruises have to stop in Canada? It's a law? I don't know. Either way. Cruise lines up this morning, not necessarily with that news, up in the market, 1.2%. You got Carnival up this morning. Norwegian up about 1.5%. I was jumping around to the airlines earlier. Delta up about 1%. This is an interesting one. I'm trying to wrap my head around the airlines, right? Excuse me. We'll put this in on a 3-year weekly to kind of see comparatively where we were prior to COVID, right? United, for instance, they were chopping around between 80 and 100. You trade down to 17. We're back to only 55. Delta, maybe the strongest international airline out there, was hovering with a high of around 60 coming into COVID. You were really even as high in last January of 62.48. You trade down to 17.51. Excuse me. We're still only back to 45. You're talking about 33%. We are off just where we were prior to COVID. Interesting when you look about that, right? Now, how long is it going to take to get a company like Delta that really needs those international flights back to those levels? That's what's going to be at stake. But I think you're going to start seeing things pick back up, even in the international segment. You're talking about the EU was looking at rules for their own vaccine process. Not sure that's going to be the case in the U.S., but international travel, It's going to be interesting to see how it plays out. I imagine it's coming back a little bit sooner than we all think. Hopefully it is. But these airlines, they have some room to make up if it does. So keep them on your radar as you see this. I think you're going to see rules relaxed. I think you're going to see that market pick up. And you'll start seeing the market pricing in. Guess what? Even international travel. One of my best friends, he lives in Switzerland. Can't wait to see him. He's probably going to be coming over here to see his family, right? There's a lot of people, maybe just international travel. There's a lot of pent-up demand across the board. Once those come back, I imagine they're coming back just like domestic travel. Domestic, I mean, talk about through the roof. Now, JetBlue, they're right back to where they were prior to COVID at about $20. You're up 0.2% today. Southwest up about 0.7%, actually above where you were prior to COVID. Made it to 22. You're trading at 60.40. All right, as I mentioned, let's take a look. Bitcoin. So the only thing I'll say about Bitcoin I want to talk about, that's a 5-year deal. Let's back it up to a 3-year weekly for Bitcoin. There we go. I mean, 30,000 is an area, folks. I'd said the problem with trading Bitcoin, if you are out there, and I am not trading Bitcoin, I don't advise it unless basically you're dealing with all your money as risk capital, because for a period of time, it looked like Bitcoin might actually have some stability between about 50 and 60,000. Yeah, that's quite a range, but you don't at least get a slide between 60 and 30. Folks, if it can go from 60 to 30 in a day, it can go from 60 to 30 to 20 to 10 in a day. It's an arbitrary price value. There's nothing actually supporting the price. There's no fundamentals. They're going to provide a floor for Bitcoin. Okay, Bitcoin can still be around at $10,000. It can still be around at $200. Ether's trading at $2,000 right now. Ethereum. That's a huge crypto that facilitates a tremendous amount of value in transactions. It's only at 2,000. Now, yes, Bitcoin has a finite supply, about 21 million, right? That's what adds to the rising prices, the constrained supply of Bitcoin. Just keep it in mind, folks. But, man, you're talking about 30,000, we make it back down. But 10,000 is totally in play here, folks, all right? So often we see charts that are parabolic, okay? If you look at this chart, and this is a 3-year weekly, I've zoomed it in, okay? But it's a weekly going back potentially about 6 months, all right? Let's just put it even on a daily, and we're going to run it in on a daily, and we're going to push it in to about 6-7 months, okay? Maybe we'll zoom it in here. I mean, the parabola probably takes us down to maybe 17,500, folks. Maybe the parabola takes us all the way down to 10,000. That would kind of be a fair parabola where you make it all the way back down, but you're talking about 17.5 completely in play here, because this right side, yeah, you could say that there's the symmetry, okay, which is 30,000 completed it, but a very, very fair argument is that maybe it's 17,000 that's got to make it to. And talk about a wipeout. You ever get 17,000, you get 10,000 in Bitcoin. My goodness, that market's going to be a little bit of fear. We'll see who has the diamond hands when Bitcoin goes back to 4 digits of 9,000 handle in Bitcoin. We'll see. Coinbase. 233.82. Coinbase been a tough run from their IPO. Not a coincidence, folks, when you see that Coinbase goes public. They push. What day did they go public? April 14th. What day was Bitcoin trading at 65,520? April 14th. Do you think that's a coincidence, folks? Not so much, all right? Now, hindsight's 2020, but just remember that type of stuff when it goes forward. You know, you see the biggest exchange in crypto, the only exchange that's going to potentially legitimize the whole industry, right? They're going public on the market. They're talking about maybe $100 billion market cap. You got Bitcoin pushing all-time highs. The day they go public, probably a good area that you might be selling the news. And that thing trades from 65,000 on April 14th down to 47,000 just on April 23rd. That's an exact week, folks. All right. In 5 days, you made it that quickly. What were we? No, 9 days. April 23rd. And then just like that, of course, we hit 30,000. So be careful in that market. Crude continuing to hold up well. I mean, crude's been in a little bit of a consolidation here. We're bouncing off the lows that we had. Crude trading at 63.42. And we'll check out gold. Gold actually pulling back from some of the highs that we had today. There's a little bit of a sell-off. Gold trading at 1879 right now. You put gold on the daily, though. We're going to back it up. Let me put it on a 3-year weekly even so we can see the full run. Gold bouncing so nicely off that 618 back in early March and then again in late March. Fibonacci trends, folks, put them on your charts because, you know, they don't always work out, but when they do, that was a trade. I did not take it. If you're looking for the gold, try out my dad's gold report, folks. Front page under newsletters. You can try it out. Everything we do, 30-day money-back guarantee. He's got new reports that come out Monday. I encourage you to check it out. Great time to do it. You gain access to all the archives instantly. And gold has traded from almost $200. We're talking about the lows of the week of March 29th. Yeah, it is. $200, $16.77. We're trading at $18.79 right now. Seems like the next place for gold. You're talking about 1962, the week of January 4th for gold. Quite an uptrend recently in that gold contract. Let's jump over to the VIX this morning. You got the VIX still hanging above 20, even with the strength in this market. We get the S&Ps up 22 points. The VIX not quite comfortable yet, giving it up with 2011 right now in the volatility index. All right, folks, stay tuned. We'll come back after the break. We'll finish up the show. We see what else we have going on. We'll take a look at some of those equities earnings today, and we'll take a look at NVIDIA and Salesforce because they're coming up. They get earnings next week, two of the highlights of earnings as we wrap up earnings season this season. Stay tuned, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get S&Ps up 27 points right now, trading at 41.80, Dow up about 320. I was going to say a chart of Salesforce. I have the option chains up here for Salesforce. We have some Salesforce in my newsletter. Rocket Equities and Options, an equity position. Actually got in there selling cash secured puts. You could have just not sold them and bought them afterwards. I know some people don't like that type of strategy. So what we did is we sold some cash code puts for a while. We got into CRM when we finally got executed. You were still able to buy that equity if you weren't trading the options. You just weren't able to absorb some of that premium that we absorbed coming into that entry price. Nonetheless, 224.40 on CRM. What I want to go over real quick, implied volatility, folks. If you're trading options, I hope you understand implied volatility. If you listen to TFNN, you probably do by now. If you're just joining us, stay tuned, folks. I talk about them. We got a lot of talks. Fast Market at 11 by the TD Ameritrade Network. Kevin Hinks, Alex Coffey do a phenomenal job checking out the implied move. Now, we're not into next week yet, okay? So we don't have that one-day market maker expected move to kind of tell us exactly how much implied volatility is priced into the earnings event happening next week. Salesforce, we get their numbers on May 27th, all right? It's always nice here. Think or swim in the earnings tab underneath the analyze tabs, right? Where they have sub tabs under tabs. You get to the analyze tab. You can either, I'm adding simulated trades, always nice. You can see the risk profile, once you build those trades, probability analysis tied to the implied volatility, the implied moves priced into the options. But you get over fundamentals, they got everything about these companies, folks, right? Everything. Probably way over my head digging into all those numbers they got, but they got them all right there. And then the earnings tab, and they show you the implied versus historical volatility. But back to the adding simulated trades, you can see, now you can't get into the options really today. They expire today, right? But next week, $13, almost $14 implied move for the whole week for CRM. And you can see, you want to hold them a week extra, you're talking about almost $17. So how much of a move do you want to get into, whether you're buying or selling volatility in Salesforce? And we'll wrap it up with NVIDIA. Now, NVIDIA's got a little bit extra volatility right now because they announced the stock split 4-for-1 today. But next week, if you buy them basically today, you're talking about a $43 move in either direction. So you're talking about almost a $24 price for an at-the-money put or call just to break even $60 stock. All right, folks, thanks for tuning in. Thanks for starting your day with me. Stay tuned. Basil Chapman's next. Fast Market at 11. Larry's back at 12 today live. Steve Rose, Dave White, Tom O'Brien this afternoon. Great Friday, everybody.